Hey, what's up, guys? I just wanted to make this quick little video on an example of a short that we took in the chat this morning. So in the last few videos, we were going over SPY a bit, and we were talking about the longs off of this bottom, where we were testing back into old demand to accumulate into, flip long. We had longs through here, I believe here was one as well. I'm not sure. We had like 5 or 6 longs intraday, intraweek throughout this leg up. But then, as you can see, we flipped bearish, breaking lows, breaking lows, breaking lows, transferring from weak to strong as we flip short. So now, currently, SPY is in this downtrend off of this high. So this here, this structure, this leg, we're now treating the exact same, essentially, as we were treating this leg up to look for longs, to where we're essentially looking for ranges to be broken, new ranges to form, new ranges to form, those ranges to be broken and then tested back into to go long under the confirmation of Wyckoff, market structure, external and internal, and supply and demand. So with this leg down, what we were seeing this morning in the chat, there were shorts previously up here as well, by the way. I just wanted to give this example in this price structure. So as you can see, we have our high, we have lower highs being formed, lower highs being formed, lower highs being formed at each of those lines. Notice and keep in mind with that, with these lower highs, with higher lows, whatever, it's the same concept of ranges developing. Notice high, we had a low here, so you consider this a range. You could have also considered this low to this high range as well. They're both valid. This comes in more to where we'll go in depth about building your system and how exactly you want to trade it, but each range is going to act the exact same, where we're breaking ranges, internals, flipping order flow, watching new ranges establish, retest into those ranges, and then get our confirmation. So this morning, what we had was we had this external leg down, which if you zoom out here, let's go up to a daily, what we can anticipate is that price may once come in under 4,400, maybe under 4,350, to then look for potential accumulation. It doesn't mean it's going to happen. Price could come straight down in here and fail this level and go short. We don't know yet. That's why we don't necessarily predict. We project the highest probability and then react once price comes into a certain area to add confluence, essentially. So we've come in to form this low, high, low, equal low, absorbing orders directly under this low here with this low, driving price back up, forming this slight internal higher low, driving back up into this demand up in here, or supply, my bad. So this morning at 9:30 open, which was right here, before market even opened, whether you're going to be trading SPY, gold, commodities, like oil, Forex, Euro USD, crypto, whatever it is that you're trading, stocks, your setup, if it is going to, let me think of how to put this. Time frames essentially don't matter in the sense that some people say you need to wait 30 minutes after open at least on any given market to kind of gauge what price might do for the day. Well, there is merit in that. Like, yeah, that can be the case. Sometimes, like this morning, more often than not, from my experience, honestly, if there's gonna be a setup in the morning, you're going to see it before open. Overnight levels, London session, Asia session, they are going to play in, and the algos are going to deliver the exact same way as New York. But New York is just going to have more liquidity essentially. There's going to be more volume to actually give you that move and push it in that desired direction. So notice externals are bearish. This high here testing back into this internal range low and range high, aka supply, to then roll, then leaving behind this supply to test back into. Keep in mind what I said a minute ago about ranges being formed, ranges being broken, and then ranges being retested, which is where we are looking for our value at. That's essentially giving us the idea that big money is ready to send the market in a desired direction. So this morning, let's get into the example. We come up since yesterday, 9:30 here, drive, bullish, bullish, bullish. Then overnight, we form this high. The low, you could have said, was right here that formed this high. You could have said it was right here. You could have said it was right here. Regardless, in this case, we started to break down here, shifting structure, bearish, 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 new lows being printed. Consider this is, or keep in mind, this is all pre-market. 9:30 hasn't opened up yet until this blue vertical line. This was our 9:30 open. So what happens at 9:30? We drive up into this supply in the exact same way that we drove up with this move up into this supply. We're now doing that again here. Notice where we wick into to the pip of this high here, absorbing orders to then begin to roll over. So we were already testing into this range with this leg up. We have flipped bearish in the internal structure. Our external structure still bearish, to then pull back up and get our double confirmation. I took a short here on this up candle. It was a little bit early. I was seeing this here's potential UTAD off of the supply to then go short. My stop was above that high a little bit, not too much. I wanted to keep it above it a little bit. Just keep in mind, like if we do come up above the high, say that wick, like I was talking about previous videos, above a high to absorb orders, or above or below a low. In this case, it would be above the high to then roll over after absorbing those orders. This is going to be the only case we're going to use the idea of double top or double bottom, which retail uses, but it's with context of other things. So I had one short here targeting these lows in here. My first partial was at this low right here. My next entry, off of the exact same idea, we've now broken our range to the downside, low, high, forming, move that out of the way, forming a new range. You see that new range on a higher time frame. That new range isn't going to be as visible. This is why I don't like the idea of time frames necessarily. I like the idea of using time frames to sift, like get through data, map your way through price in this style. So again, testing back into supply after breaking a range, retesting into range to then distribute into, notice all these wicks tapping into liquidity. Liquidity, liquidity, that is money. Remember that. Liquidity is just money, and we're hunting liquidity. We're looking, where is the money at in the market? Where are the orders resting at? To then retest and redistribute into. So we had another short entry right in here. So we formed the high, this low. We've now, within this high to this low, there are other lows. This low, this low, this low, maybe a low here. They were all broken to the downside to then retest up into, to do what? give us seller's climax, automatic rally, secondary tests, sign of weakness, our UT, our push back down, and our UTAD absorbing the orders of liquidity above highs here, highs here, highs here, and highs here, absorbing those orders, essentially grabbing that money to then fling it in the downward direction. So I had a short entry here. My stop loss was above here, just a little bit, not too much. I didn't want to put my stop all the way up here. That's not how you get high RR, and that's not how I trade. So my stop loss on second entry, which was just a scalp, was there. My target on this short was the low that created this high. So this here was my target one, where I've already taken partials the instant we traded into this low. I've ruled my stops, break even, and now I'm holding runners while still holding runners off of this short, and now holding runners off of this short, with the potential for, if this external move that we were watching does play out, notice you don't even see the orders that I was talking about all the way down here because they're on such a low time frame. We refined that price, and we know how price delivers through each of these time frames to where once, let me do something like this. To where once, or if price wants to begin this external leg down today. It is Thursday. It's actually a short week. I think it's OPEX this week as well. So I'm not sure if that'll happen today. It could wait till next week. But regardless, we know how to scalp. But our scalps are based off of higher time frame areas of interest, key levels, whatever you want to call it. The name, the key level, supply and demand, area of value, area of interest. There's so many names going in the industry going around. People just trying to make content about it, but half the people out there aren't making content they don't know what they're talking about, in my opinion. They're not making content that's actually true to what the market is saying. They know the terms, but they don't know how to use them properly. So essentially, if this external move in price down wants to continue, and we start seeing price come down into here, these runners can turn into huge profits just off of the runners. And that's after we've already rolled break even. So those are just a few of the trades that we took this morning in the group. I probably just got stopped out of this one, actually. It might still roll, but I'm already in profit on this one. I already rolled break even, so I already took a dub on that. And on this one here, I'm still holding my shorts. So those are just a few of the trades that we took in the group this morning. And yeah, that's really all I got for this one.